Have you ever wondered why some people seem to get rich out of nowhere? While everyone else is chasing the next big stock tip or crypto craze, there's a select group quietly building fortunes. Fortunes so massive they'd make your jaw drop. Imagine this. In 2019, I met a man, a 67-year-old, who didn't look like he had a dime to his name. But behind closed doors, he revealed something extraordinary. He turned $10,000 into $5.3 million. No Instagram posts. No flashy day trading courses. No crypto coach gimmicks. Just 7 simple strategies that true millionaires have been using for decades. Now, here's the kicker. These aren't speculative schemes or get-rich-quick tricks. These are time-tested investments that have turned ordinary people into millionaires without needing to predict the next market boom or risk everything on high-stakes gambles. Even Warren Buffett, the greatest investor of all time, built 99% of his wealth after turning 50 using these exact strategies. And guess what? In private meetings, he recommends these same assets to close friends who want to grow their wealth discreetly. What you're about to learn today isn't just a list of investments. It's a complete system, a system so powerful that it has allowed the financial elite to multiply their wealth silently and systematically. Pay attention, because the 7th asset is the most powerful of all. It's the key that amplifies the potential of every other strategy. Missing this last secret would be like leaving millions of dollars on the table. Are you ready to uncover the silent revolution of wealth? Let's dive into the first asset, the foundation of the entire system used by millionaires to grow their wealth quietly, no matter what happens in the market. Asset 1, index funds and ETFs, the quiet engine of wealth building. Let me ask you something. Have you ever tried timing the market? Maybe you've sat glued to your screen, waiting for the perfect moment to buy or sell. Spoiler alert, even the pros struggle with this. So, how do the wealthiest investors consistently build fortunes without wasting time trying to predict the unpredictable? The answer lies in one of the simplest yet most overlooked tools, index funds and ETFs. But here's the twist. They don't use them the way most people do. Instead of jumping in and out of the market, they automate their contributions. Think about it. If you had invested just $11,000 per month in the S&P 500 over the past 20 years, you would have accumulated over $1 million, silently, effortlessly, and without needing to make complicated decisions. But wait, there's more. True millionaires don't settle for generic ETFs. They strategically allocate their money into sectors that capture long-term growth. For example, QQQ focuses on tech giants, VIG targets companies that consistently increase dividends, and SCD provides stable income. It's like owning a piece of the most profitable companies in the world without anyone noticing. And then there's a hidden layer few investors know about. Leveraged ETFs like UPRO, S&P 500 3X, and TQQQ, NASDAQ 3X. When used wisely, not as risky bets, but as part of a well-structured portfolio, they can amplify your gains significantly. Here's the best part. You don't need to be a financial genius. Set up automatic monthly investments. Choose your allocation wisely, and let time do the work for you. This is how the wealthy build fortunes, not overnight, but through silent, efficient strategies that make money grow effortlessly. Asset 2, self-storage units, the underrated cash cow. Now, let's talk about an investment so underrated, it almost feels like a secret. When you think of real estate, you probably picture houses, apartments, or office buildings. But the smartest investors are putting their money into something far less glamorous, yet incredibly profitable. Self-storage units. Why self-storage? Because people always need extra space. Whether it's to store furniture, documents, or seasonal items, demand remains consistent regardless of economic conditions. During good times, businesses rent storage to expand. During downturns, people downsize their homes but still need a place to store their belongings. The result? Predictable cash flow without the drama of tenant negotiations or complex rental laws. What most people don't realize is that you don't need to buy an entire self-storage facility to invest. There are specialized REITs like Public Storage, PSA, and Extra Space Storage, YEXR, that allow you to invest in this sector with small amounts. Imagine receiving monthly dividends from hundreds of storage facilities across the country without managing a single one. And here's the kicker. Self-storage has one of the highest profit margins in real estate, often exceeding 60%. Compare that to residential properties, which operate with much lower margins due to constant maintenance and tenant issues. Leases are short and flexible, but most customers keep their units for months or even years, ensuring recurring revenue. Even better, during times of inflation, rental prices can be adjusted quickly, protecting your investment. While traditional real estate struggles during downturns, self-storage remains stable because people always need extra space, no matter the economy. Asset 3, life insurance as an investment, the wealth-building secret. When you hear life insurance, what comes to mind? Probably a monthly expense that only benefits your heirs when you're gone. But what if I told you that the wealthy use life insurance as a tool for wealth growth, taking advantage of tax benefits and accessing cash while they're still alive? Whole life insurance builds cash value over the years, and this money can be accessed at any time, tax-free, without needing to sell investments. Think about it. While most people pay interest to banks, the wealthy finance their own ventures using their insurance policies. Instead of relying on expensive bank loans, they borrow from their own policies, pay themselves back, and keep growing wealth without bank fees or taxes. It's like having your own bank, but without the bureaucracy. But there's an even more strategic option, Index Universal Life, IUL. This policy gives you the best of both worlds. When the market goes up, your money grows with it. When it drops, you lose nothing. Imagine participating in stock market gains without the risk of market crashes. That's exactly what IUL offers. Most financial advisors don't talk about this because they prefer selling traditional products, but the wealthy know that a well-structured policy can be one of the most efficient ways to build long-term wealth. The best part? You can start with modest monthly contributions and increase them as your income grows. Unlike other investments, gains aren't taxed while the money grows inside the policy. It's a completely legal way to shield your wealth from income tax. Asset 4, REITs, the shortcut to premium real estate. When people talk about investing in real estate, they often imagine buying houses, apartments, or office buildings. But there's a shortcut that the smartest investors use to profit from real estate without needing to buy a single property. REITs, real estate investment trusts. The problem with physical real estate is that it's not liquid. Selling a house or building can take months. But with REITs, you can sell your stake in seconds. Even better, you receive recurring dividends without dealing with tenants, maintenance, or renovations. Some REITs pay yields above 5% per year, in addition to long-term appreciation. Most people think about residential or commercial properties, but the wealthy focus on strategic real estate niches that are quietly growing. Data centers, for example, are a perfect opportunity. If you had invested in REITs like Equinix, EQIX, or Digital Realty, DLR, 10 years ago, you'd have multiplied your money several times without buying a single property. Another sector the wealthy love is healthcare REITs like Ventas, VTR, and Welltower, which invest in hospitals, clinics, and senior housing properties that generate consistent income regardless of economic cycles. The secret here is diversification. While one sector might go through tough times, others continue growing. It's like having a portfolio of premium properties spread across the country, but without the headaches of direct management. The best part? You can start with much smaller amounts than what you'd need to buy a single property. Asset 5, private lending, becoming the bank. Most people spend their entire lives borrowing money from banks, paying interest, and accumulating debt. But real investors do the opposite. They become the bank. While the majority struggle to get credit, the wealthy find ways to lend money and profit from the interest, ensuring a stable and secure cash flow. One of the safest ways to do this is through real estate hard money loans. You lend money to real estate investors who need quick capital, using the property itself as collateral. If the borrower doesn't pay, you acquire property at a discount. It's a win-win situation. You either collect high interest or acquire an asset below market value. For those who prefer to start with smaller amounts, there are peer-to-peer lending platforms like Lending Club and Prosper. You can lend small amounts to dozens of different people, diversifying your risk. Some investors achieve returns of 8 to 12% per year, much higher than most traditional investments. Another strategy the wealthy love is invoice financing. Businesses often need to speed up their cash flow, and pay investors a fee to finance their invoices. You buy an invoice at a discount and later receive full payment, guaranteeing profit without needing to run a business. The best part? Private lending is something banks don't want you to know about. After all, if you start lending money directly, they lose customers. Asset 6, timberland investing, nature's wealth generator. When we talk about investing in land, most people think of residential or commercial real estate. But there's a type of property that the wealthiest investors quietly buy, one that increases in value naturally without tenants, renovations, or high maintenance costs. Unlike other types of real estate that require constant upkeep, timberland works completely differently. Trees grow on their own and increase in value over time. Timber can be harvested and sold in planned cycles, generating recurring income without relying on rental demand. The best part? The land itself also appreciates over time due to demand for timber, conservation, and regional development. During inflationary periods, timber prices rise, meaning timberland becomes even more valuable. While cash loses purchasing power, assets like timberland preserve and even increase their real value. Billionaires like Ted Turner and Harvard University's endowment fund have billions invested in this sector. You don't need to buy an entire forest to get started. There are timberland REITs like Weyerhaeuser, WY, and Rayonier, RYN, that allow you to invest in this market with small amounts. Imagine owning a stake in thousands of acres of productive forests without worrying about managing them. Unlike stocks or crypto, timberland is a physical asset. It can't disappear or be devalued by a sudden financial crisis. And there's always demand for wood in industries like construction, paper, and furniture. Asset 7. Bonds and municipal bonds, the financial fortress. While many investors focus on stocks and crypto, the wealthiest do something different. They understand that the secret to keeping and growing wealth isn't just about making money. It's about protecting it. One of the safest and most silent ways to do this is through bonds and municipal bonds, assets that pay steady interest and in some cases are even tax-free. Warren Buffett always says, rule number 1, don't lose money. Rule number 2, never forget rule number 1. Fixed income bonds allow you to do exactly that. Protect capital while still generating income. During economic downturns, bonds increase in value while stocks and other assets fall. It's no surprise that the largest investment funds keep a significant portion of their portfolio in bonds. Millionaires understand that it's not just about how much you make, but how much you keep. That's why they use municipal bonds, which offer tax-free income. These bonds are issued by local governments to finance infrastructure, schools, and public projects. If you earn 5% per year in municipal bonds, that's equivalent to earning 7% or more in taxable investments, depending on your tax bracket. The key is combining different types of bonds. Treasury bonds for maximum security, corporate bonds for higher yields, and municipal bonds for tax-free income. It's like building a financial fortress that generates money consistently, no matter what happens in the market. Now that you know the 7 secret assets that true millionaires use, I want to know which one caught your attention the most and why. Comment below. I'm starting with name of asset, and let me know which one you'll implement first. I read all comments and love seeing how you're planning your path to silent wealth. This is your chance to join the ranks of the financial elite. Don't let these secrets slip through your fingers. Start today and watch your wealth grow silently, steadily, and securely.